and then won't be able just to go and get back to business when the price is $20,000 again. Prejudice leads to mistakes when you just see what you want to see and stay ignorant. Everyone wants to fill their pockets with dollars that can comfort during any crisis in the economy. Glad to welcome you to the Coin Post channel. If you haven't just heard about Bitcoin but decided to dive into this, please accept my congratulations, because it's never boring. On the one hand, we have miners who dump the price. On the other, Tether, which prints dollars to pump a new bubble. And there's also a stock market with events affecting Bitcoin. And the list goes on. The author of the Crypto Daily channel brought up the subject of the top 5 things we need to avoid so that we can finally focus on Bitcoin. I also want to go through this list, as there are points to agree on, to clarify, and make my own conclusions. So I present the court of our dear viewers the top 5 things that interfere with Bitcoin. Join our community and don't forget to subscribe to the channel. Let's begin. The first horror that keeps you awake is that miners sell bitcoins and thus push the market down. When miners sell more cryptocurrency to the market than mine, it's called capitulation, and it's associated with the fact that they are working in the red. We talked about this in detail in a separate video on mining, but since we analyzed the top 5 fears around Bitcoin, let's remind ourselves again. A new study arrived just in time. According to it, miners sell more bitcoins than they mine. Interestingly, this picture has been observed since the beginning of the year. Before the halving, the miners broke even, and after that, they began to sell more than get. To explain what's happening is quite simple. Before the halving, they had not only to pay for electricity, but also to re-equip mining farms. That is, to buy new ASICs that will continue to generate revenue after the halving. They did so. However, the sales growth after May 11th happened because the reward dropped twice, but the price didn't even show much growth. Therefore, the mining market is in the process of reformatting. When the weak, those who have lost profits, must leave. I'm not ruling out that there is also a hidden game in addition to natural selection when the leading miners keep the Bitcoin price to get rid of competitors. After all, it's easy for small private miners. If the price falls below the paycheck level, they unplug until better times. And when it goes up, they plug in again. Those for whom mining has become their primary business cannot afford such luxury, and if they decide to close, they will have to sell equipment, give up renting an office, and fire their staff, and then won't be able just to go and get back to business when the price is $20,000 again. Miners may or may not sell the mined bitcoins, but they do so for a specific commercial purpose, and their certainty not to crash the market. They are not their own enemies and will not just burn their own money. But traders might do that, so we're moving on to the next point. I've already publicly admitted that I always monitor the Bitcoin price, look at the charts, and try to understand the next move. But why am I doing this? And why are you doing this? So, most people who are not heavily involved in trade, but simply invest or are just looking at Bitcoin, spend a lot of time analyzing price charts. This is the kind of thing that leads to myths such as price gaps on the BTC-futures chart. I spoke about it more than once when sorting out the forecasts of other traders. Although each time I explain that there is no reason to close the gap, the Bitcoin price does this pretty often. For this reason, we have raised the gap in the category of technical analysis indicators, even though the technical analysis doesn't have a single indicator that would work with 100% accuracy. To explain the phenomenon of gaps, it's enough to recall the high volatility of the Bitcoin price. It moves in a vast range, and it's not surprising that, sooner or later, it closes almost all gaps. Therefore, let's take the graphs easier and remember that technical analysis is a good and helpful thing, but it only gives the likelihood. And you should never live off the charts because prejudice leads to mistakes when you just see what you want to see and stay ignorant. So we kinda talked about mining, but monitoring the hashrate chart in the Bitcoin community has been elevated to a separate cult. I've said at least 3 times, but probably more. why a hash rate drop, regardless of its cost, can lead to a price decrease. That in fact the hash rate goes after the price and not vice versa. But for some reason, we have to return to this topic again and again. Similar concerns were related to the halving, and the Bitcoin hash rate seems to have started to go down, but something seems to have gone wrong, and at the moment we are almost moving towards a new record. How to explain this? Here are a few options to choose from. Miners lied about the cost of Bitcoin mining, and it's actually much lower than they say. A new big player entered the market with huge discounts on electricity. Or there is a competition between big players, so now they are ready to work in the red. You can choose any of these three options or give your own in the comments. And then we have 2 more points, without which we cannot imagine the analysis of the Bitcoin price. Another popular trend is the correlation between Bitcoin and the stock market, specifically with the S&P 500 index. Why, for example, did Bitcoin crash after March 12th with a sale on the stock market and then recovered after it? Can we call this a correlation? From a technical point of view, yes. There are even special tools for technical analysis. But if you look in detail, it's reasonable to talk not about correlation but about conditions on the global financial market, which include both stocks and cryptocurrencies, which in turn lead to one or another price change. Therefore, we actually collapsed with the S&P 500 on March 12th because markets panicked, everyone wanted to fill their pockets with dollars that can comfort during any crisis in the economy. And then the markets began to grow, peace returned, and everyone wanted to make money by investing in risky assets, which are stocks and cryptocurrencies. The current freezing of the economy and a falling market is an excellent chance for Bitcoin to prove that it's something more than just a risky investment asset. I personally expect that it will be so, but only time will tell. And what we must also do is put an end to conversations about manipulating the crypto market with Tether. Your Bitcoin is a bubble pumped by Tether. There's such an accusation, and it looks quite valid, if not for one but. In 2017, the capitalization of the USDT stablecoin was only $1.5 million, and in December 2017, Tether's capitalization grew to $1 billion and $200 million. It would seem there's a resemblance. Going from $1 million to $1 billion just cannot be accidental. But in December 2017, Bitcoin's capitalization reached $300 billion. And I don't understand how Bitcoin could be pumped up so much with the help of 1 billion of Tether. Today, the situation with Bitcoin and Tether is even more impressive. Since the beginning of 2017, the capitalization of USDT has increased more than twice, going from $4 to $9 billion. And Bitcoin, as it couldn't hit $10,000, continues to stagnate there. The question is, why, with the steady Tether growth, we don't see Bitcoin's feedback? Maybe the Bitfinex manipulator broke? Or are they afraid of a lawsuit filed against them and a parallel investigation by the New York prosecutors? And if they are worried, then why pump Tether with another $5 billion? I do hope that each of you will hear me out and understand me. I do not protect the Bitfinex exchange or the Tether issuer. Obviously, the parent company Bitfinex did a lot of things, and the prosecutor's office is investigating them for a good reason. I'm against calling Bitcoin a bubble pumped with Tether. Bitcoin is much more than someone's financial speculation, but we'll talk about that in our next video. That's it for today. Thank you for watching. It's the Coin Post channel. Subscribe and get enlightened.